Thank you, Marlon, and hi-de-ho, everyone. Thank you for joining us for Thursday's edition of Trading Buddies. My name's Jeff. I'll be joined very, very shortly by Ash, and we are Trading Buddies, and we hope that you can be joining us as our Trading Buddies and go through the afternoon and put a little bit of money in the pocket. That'd be good. I've got to say, I haven't been anywhere near the charts all week, guys. And if you're a member of the Telegram group, my sincere apologies for not posting any videos since Monday. And it's simply because I've been tied up with my own business affairs and unable to get in front of the charts. That has also been the case up till about half an hour ago. So I'm not terribly au fait with what's going on around the place. I may or may not trade based on what I see versus what I know about the market. Ash will bring me up to speed though, and I'm sure we'll find something to do. First up though, as always, it's let's go have a look and see what's going on with the pound and the US dollar as we get near to London session open. All right, those of you who are aware, we do trade this when the setup is right each and every day, and it is pound US dollar 1 hour chart. And we seek to trade really the breakout of the range that we've been in since the Asia session began. We isolate that by getting the time frame. Third 1 hour candle of the day, if you like. Most platforms, that's going to be the 0200 candle. And there that is. We then find the range, the high and the low of the range since that candle leading into London session. So there's the high of that range, and currently the low of that range is on the current bar, whose low is at 110.60 or thereabouts. I've rounded that down to 110.60, and the high is at 111.21. That gives us, at this point in time, a difference of 61 pips. And then we look for the midway point. So we're looking for the middle of that range. Unless this goes lower in the next minute or so, the middle of that range will be 1.1095, and that will become our entry if we decide to take the trade. Now, a couple of things about that. What we're seeking to do is trade in the opposite direction of the current price bar. So the current price bar is going short. We want to trade long. If we are near to the midpoint and therefore the entry point, we do not take the trade. We are not near the entry point at this point. Lots of points going on here. So we will be taking that order, providing that the candle doesn't shoot up here and get close to the midway point. So I'll be looking to enter here. We'll be looking to move our stops to entry once we hit the top of the range, and our stop loss will be at the low of the range. Prefer it to be under the daily pivot, but we're not using discretion. Well, actually I did on Monday use discretion, and I'll go through that a little bit if we get the opportunity so to do. There was that trade from Monday, and as I said, I'll go through it. Righto, as we get near, I can set that trade up. It looks like the candle is going to close in a good spot. So let's employ the trade manager so I don't have to sweat over this one. Now, this is in test mode, guys. So you need to, if you are considering trading this, trade it at very, 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 very low risk, if at all. I'm trading at 0.05 of 1 pip. That's 1 pip, 1%. So that should indicate to you that there is no confidence in this system yet. Trying to perfect it, of course, so that we can release it as a system. But at this point in time, the answer is no. Right, there we go, 110.95. 110.905, sorry, is the entry level. Stop loss is 110.60. And we won't take profit pips at 30. We'll take our first step towards profit at this level, 111.21, 1.1121. and we won't remove anything. We will simply move our stop loss to entry. Now, the target on this is 2.5 to 1. So I'll put that in, I'll put the order in the market and then I'll work out what our target is. So the risk is 30 pips. 2.5 times 30 is 75, right? So we go 75 above our entry, which will be 111,655. Let's call it 111,65, shall we? Which is bang on that. I'm okay with that. So if this does go long, obviously gets through the highs, I think our prospects of getting the target are pretty good, because we won't be shooting through that high, and DR1 sitting there. Actually quite like the trade. It may work out well. If it does not, then that will mean we've had, so let's go back to Monday. We had a losing trade that I actually managed to get out at break even. And the reason for that, I could see what price was doing. I'd hit this level and it just came off and off and off and off and off on the smaller time frames. So I decided to move my stops to entry at that point. So technically that would be a losing trade, but we managed to save our money by not allowing it to play out. On Tuesday, what happened on Tuesday? That was a no entry or a break even, I think. Let me work that out. So there's the 2 a.m. candle right there. So the range would have been from here to the 9 o'clock candle, which is that one. So the range was here to here. My goodness. Can't remember. So 98, let's call it 100 pips. So 50 pips from there would be 109.966. 109.96. So it'd be 110.46 would have been the midpoint. 110.46 is there, and that's the 9 o'clock candle. Is that right? Yep. So it would have been a long entry. So you got taken in around about here somewhere, and you would have got your TP1, move your stops to entry, and you would have been taken out at entry. What a shame, because it probably would have gone 2.5 to 1. Maybe not. Maybe not. So break-even trade there on Tuesday. Wednesday, I know I watched this one. It was a no entry at all. Why? Because price was pretty much bang on where the midpoint was. So no trade yesterday. Would have been probably shorter, as I recall. Can't remember. But there was no trade, definitely no trade yesterday. So today, there we go. Entry is at 1.10905 and stops to entry at 1.1121. Righto, that is the pound versus the US dollar. I have one order in the market, and I placed it on Monday, and it is EuroCAD long based on a weekly break and retest of this trade line. It's almost a game changer plus bar. What's a game changer plus bar, I hear you ask? Okay, those of you who don't know what a game changer is a candle whose, if we're going short, whose high is higher than the previous candle and closes on or near its low. So high is higher than that one, closed on or near its low. In this case, that did, and wow, if you got that, you would have been doing pretty good. Here's another one, closed higher than its high, the previous high, closed on or near its low. You'll note that that is a green body bar. Doesn't matter what color it is, as long as it's closed near its low, that qualifies as a game changer bar. A game changer plus bar is, don't think this one is, but game changer, low, lower than the previous, closed on or near its high. So the reverse of what I was talking about there a minute ago. And the plus bit comes in if you've got an inside bar that follows. This does not qualify as an inside bar because the high of this bar here is higher than the high of the previous. So it's actually not inside that bar. Yes, the body is, but the whole candle is not. In fact, that is a game changer bar suggesting that you go short, right? Whilst I would agree with that from a trend point of view or a momentum point of view, no, because of this bar here. But from a trend point of view, yes, I would agree with that. However, reading just a little bit further than that, this bar failed to get 50% into this one, which suggests to me that the bulls are still in charge here. And for that reason, I think this can go higher. How high? Well, in the first instance, not too far, to be fair. I think it can only go to the trade line or trend line in this case, and this horizontal level. So for that reason, my take profit level, or my first take profit level is there. And if I hit it, I'll remove 50% of the trade and move my stops to entry, meaning that if we come back, at least I've got half of the risk in profit. So that's the way I'm dealing with that one. If you want to follow it, the entry level, it's a weekly chart, so it will expire on Saturday morning when the market closes. The entry level is at 1.3575. Stop loss is 230 pips below that, which should be 1.3345. And profit 150 pips above, above that, which would be 1.3725, if my maths serve me correctly. So all I'll do at that point, if I hit it, stops to entry, take half off the table, meaning I can't lose on the trade. I'm not sure it can break through here, to be fair. Intrinsically, the direction that I'd really like to trade this is short, in congruence with the game changer bar, I guess, on the week. But I see that as a short-term buy to here. That's your okay. It's the only trade that I've had all week, given that I haven't been in front of the charts. Do have a few that I'm watching, but I'll bring Ash in here. G'day, buddy.
Hello, mate. You okay?
Oh, mate, tired as. Just
yeah,
barely keep my eyes open. Been so busy in the paddock this week, chopping up plants.
Well, if it's got to be done, it's got to be done.
Guys. It's not what you think, or not what you might think. It's actually bamboo.
Not what you hope.
Well, I would be asleep if I was doing that, without a doubt.
Well, it depends which strain you have.
Well, I suppose so, yes, indeed. No, it's been really, really busy. I haven't just been nowhere near the charts at all, sadly. But
well, do you know, mate? I mean,
that's the way it is.
Yeah, and actually, if you're not 100%, it's not a good idea, is it?
No.
But yeah, I see what you're looking at there. Inflation data from Germany today, 10% and not coming down. So really some terrible news for the bulls of the stock market, which, you know, I was hoping to be one of them, but there's just no reason to go long. German CPIs, as I say, coming in at 10%. We've got some import data from Japan also all of a sudden being really negative, which you know, well, when I say negative for CPIs, because again they've just skyrocketed in Japan, which has not really been a problem up to this point. But all of a sudden we start to see the dynamic potentially change. We saw the Bank of Japan not too long ago come in and have to prop up the yen by buying yen for dollars that were in their reserves. That didn't do a lot really to boost the price of the yen. So
does.
now
it does for 5 seconds, and then it just all goes back to
exactly
normal.
Yeah, and now we've got data which is suggesting that inflation could actually become a problem in Japan, which, as I say, it wasn't really before. Then we had PPIs. Well, I say then we had PPIs. Prior to that, yesterday we had PPI data from the United States, also not showing any signs of relief. So there's nothing really lining up for the bulls for the stock market. We've got gold down this morning. We've got the FTSE down this morning. The Nasdaq's down this morning. Anything that you can list is down this morning. And I think now investors are probably starting to get a little bit concerned that the CPI data will not help them out either. Fed minutes yesterday did suggest that they're getting a little bit more concerned about the state of play. They are currently at 3%, as we know. The benchmark level looks like around about 4.5%. If they go 75 basis points next time out, then they've only got another 75 basis points to go throughout the next, the course of the year and a few months. So we could be close to the top rate for the United States, which suggests that a turn is probably coming. Whether it's this year, I don't know. We still got 3 months of the year to go, and the market at this stage does not look like it's turning around. Looking very, very negative out there. And as I say, nothing is suggesting that we're going to get anything of a boost with stocks. So risk assets are well and truly off the table. Gold is the other one, as I say, which I'm quite interested in gold. And the reason I'm interested in gold is that gold tends to do well in a high inflation environment, but it hasn't been able to do that. The shackles are on gold because of the 10-year. So as we see the 10-year yield go higher, gold has been suppressed. Well, of course, if the Fed have to stop or pause at 4.5%, then the 10-year won't go any higher. And at that point, we should find fair value for gold, because in my opinion, and really what we're seeing already, interest rates have been going higher and higher and higher, and yet inflation data continues to go in the same direction. So what they're doing isn't working. And it probably is more about the conflict in Ukraine than anything else. There is also, a spat going on between the United States and China over semiconductors and chips. That's not helping things out either. So as the market kind of comes back online, inflation isn't getting fought by the Fed. My suspicion is what's likely to happen is the Fed won't be able to go any further than the 4.5% mark, even though they probably feel they need to. Inflation data remains elevated, maybe not at 10%, but somewhere around about the 6%. And that's the kind of environment that gold will thrive. So I think there is a trade with gold. I'm not sure if it's yet. We did see, we'll look at the chart in a moment. Is that gold there?
That is, mate.
That's gold there. So we've seen that. That's the weekly. Yeah, the bar a couple of weeks ago suggested that we could be getting a turnaround, but all we've done is bashed our head right up against the trend line there, and now we're starting to ease back down again. CPI data today could cause some kind of fluctuation. We'll see the VIX come down, we'll see the S&P, the Nasdaq, gold, the FTSE, everything else go higher if CPI data shows some weakness. But the trend isn't looking that way, and I think that's that. This morning we've kind of broken through a couple of key levels on the FTSE without holding, which is unusual. Normally before data, you would actually see a decent fight for a level, but there's no fight right now. Same with gold, really. There's no real fight in the market, and I think that German data and the Japanese situation really hasn't helped things out a little bit. Yeah, we see the pattern there as well. I mean, it's forming, mate. It's forming, but we've got no catalyst. The catalyst still isn't there. Now, if that does form, and CPI data comes out weaker today, there's plenty of opportunity to get into a long with gold. And I would prefer gold than I would the Nasdaq, really, because I still think that the fundamental problems are going to be will remain in something like the Nasdaq. But as I say, the inflation environment should actually do quite well for gold. We saw PepsiCo come out yesterday and announce profits, and they've been almost taking advantage of the inflation figures. So some stocks will do still okay out of the situation, but they may not be able to do very, very well for very long. So there's a challenge, really. There's a real challenge, and right now it looks like another leg lower for risk assets. It doesn't look like we're getting anything. There's literally nothing. It needs something. It needs something to sort of to garnish some hope on. I looked at some of the ETFs yesterday for gold, and there was the biggest outflow for a long time in gold ETFs. So so there's obvious issues. Central banks have been buying it, but the speculators have been not dumping their positions, but they've been they've been coming out of their positions. And the interesting thing I think for gold as well is if you're looking at an asset which is safer than everything else, gold's down about 3% this year. The Nasdaq is down 25% this year. So it kind of tells you everything you need to know about where the smart money would have gone if you're not being able to make anything. It probably would have been held in gold. But that does suggest that ultimately the gold price is going to go higher because it hasn't come down quite as far. It has managed to remain relatively robust. I think people are just waiting for the 10-year just to turn around a little bit. Just the expectations that the Fed won't continue to go. And anybody that doesn't understand, if you look at a 10-year bond yield, a treasury yield.
Before you go on to that, you're really going to have to do a lot of talking into trading gold long yet. I'm not saying never, but yet is my answer. And really, apart from what I've already said 100 times, and I bore people with it, and I don't like to do that. So I'll take another tack and say that this couldn't be clearer in my humble opinion, where you've got a lower low, lower high, lower low, lower high, lower low, lower high. The trend couldn't be clearer, could it, really, at the end of the day?
No.
So it has to change. That trend needs to change before I can actually think about buying gold. And
yeah, I mean,
if that happens here, maybe I get it. Maybe a higher low, I get it. But until I see one of those two things, I think I've still got to be a bear.
Yeah, the pattern with gold looks like it may be that this would be actually the head, and we're looking at a right shoulder, and what it needs to do is come up to the top of that right shoulder to form the neckline. Not there. So the inverted heads, I should say. So we got an inverted head, down there, making that the left shoulder. So what you'd really want is for gold to get through the trend line, hit the neckline, come back to around about the trend line, and then start to take off. I mean, that would be the perfect pattern then. Something like that would be good.
That's what I'm saying, exactly. That I can't get interested until I see something like that.
Yeah, we need the chart pattern to give us some upside. But COT data was suggesting last week that there was a little bit more interest in gold. ETF data suggests there's outflow, so there's no interest in gold. But the environment is just missing one piece of the puzzle, and I'll explain it if you like, mate. If you've got anything else right now.
No, I've got nothing pressing. But what I would say is if and when, and it will turn, when it does turn, it's going to go a long way because it's gone an appreciable distance in the opposite direction now, which is unusual in these times. I'll say these times. But really, I still can't see anything until here.
I think that's fair, and also
maybe down here.
As you rightly say, it will go a long way, and that really sort of enables us to wait. We're in
there's no rush. Absolutely, no.
The issue is, and don't get me wrong, I've been trying to get into a long for quite some time with the markets, but I keep getting turned over. So and it's one of those things you've got to make sure that you put your safety valve in place with this sort of environment. There's no point in just leaving a trade run and hoping for the best, because that's all you're really doing is hoping. You just got to, if you've got a bias, which mine, I suppose, has been to see a turnaround at these particular levels. It doesn't look like it's happening. But my bias was to see if we could get a turnaround, looking for some data to help us out. But the data hasn't helped us out. So you put your safety valve in place, trade closes, and then you wait for the next opportunity, and that's all you can really do right now.
Show us what you think. Show us your thing. But before you do that, Gary's asked me a question, and I think it was on the pound dollar trade, Gary. The answer is no, don't worry about that. In fact, if this had hit the daily pivot, I'd be far more confident about the trade. It hasn't, but I wish it had tested it. Are you asking me a close past the stop? No, just past the stop loss. If it closed beyond the daily pivot and retested it, then I'd change. But the reality is, what we're attempting to do here is trade the breakout of that range, right? That range there. So whilst ever it's going from top to bottom, and it looks like now that it's found the bottom again, we should be okay. If it hits the top, we move our stops to entry and there'll be no loss. So don't be concerned if it closes down here, that's fine. But if it then retested the daily pivot and didn't get back above it, then I'd probably close the order. But at the end of the day, if they came back in here, price comes back in here, that's a false break at the bottom of the range, right? And I won't say 9 times out of 10, but the high probability is that if there's a false break at the bottom of the range, it's likely to go to the top of the range. Not certain, but it's likely to happen. It's a probable thing, it's a probable outcome. So for that reason, false break works. Break and retest probably doesn't, if that all makes sense. So I would probably cancel the long if I got a break and retest. But if I got a break, got back into the range, then I think we're in good shape. I hope that answers your question, mate.
Good stuff.
Sorry, Ash.
Good stuff. Okay, mate, no problem. Right, so let me explain the situation with yields and stuff. So what every government does, what every central bank does is they offer bonds. So treasury. So in the United States, it's called the Treasury bond, and the one that most affects gold is the 10-year. So you got your 10-year Treasury. Now, if the Treasury is, let's call it, it's $100. It's not $100, but let's say it's $100 to buy the bond, and that bond pays you 1%. Now, what happens is if the bond goes down in value, let's say it drops to $50, the yield will go up. Because you're able to buy 2 bonds now, so you're effectively getting 2%. So what we've seen, so this is the bond price, and bond and treasury, the T-bill is the same thing. So that's the bond price, and that's the yield. So so as the bond comes down in price, the yield goes up in price. Now, if the expectation of the market is that the Fed will raise interest rates then what happens is the bond yield will go up as well. So interest rates high, yield goes up as well, because the expectation is, so the treasury yield tells you how market traders feel about whether the Fed is going to be able to hold. So you'll see the 2-year, what we saw was the 2-year bounce higher than the 10-year. So the 2-year yield, the 2-year bond was higher than the 10-year. And what the market was telling us is that the Fed are not going to be able to hold these interest rates into the future. You know, they're going to be putting them up now and they're going to be lower in the future. And that is a bearish signal for the stock market. Because it's suggesting that in the near term that there will be aggressive monetary action. There'll be aggressive monetary policy. So interest rates go higher, and the bond yield goes higher. Now that's bad for gold. But what will potentially happen is the Fed will eventually pause. So if the Fed pause, then the 10-year will maybe sort of like exist around about the 4% mark. And if gold has kind of come down to sort of like a point, let's call it 1550, all of a sudden, if inflation, and as I say, if gold is the inflation hedge, then all of a sudden, if inflation sort of like remains sticky, but this does not move any higher because the Fed aren't raising interest rates to combat the inflation, then that's when we'll start to see the gold price move higher. But the first thing we need is this to remain or drop. And this is the 10-year yield. While this is continuing to go higher, the gold price will continue to fall. But if inflation sort of like, let's say inflation sort of like ends up sort of, going around, so that's 6% inflation. Now that's way above the Fed's rate that they're looking for, around about the 2% mark. But with 6% inflation, it would suggest that tangible assets will continue to go up in value. So, and a tangible asset is gold, it is housing, it's all that stuff, because 6% inflation is telling us that the price of goods is going up by 6% every year, which means that gold by default should increase by a 6% handle if this was at zero, let's say. But if this starts to come down and the inflation remains sticky, that's when we'll see the gold price start to move higher. So what we're waiting for really is a pause with the Fed. Now, for the Fed to pause, their interest rates, what the market is looking for is CPI data, which is released today, to start coming down, because this is an inflation print right now. The Fed are over here, and so if inflation is currently sort of like, let's say it's around about the 9% mark, and the Fed are currently at 3%, then they have got a 6% spread between this price and this price, and they need to get this higher. What they're trying to do is decrease this 6%, because at the minute it's hurting the market. Obviously, what that does is when they move the interest rate higher, is that puts mortgage rates higher, it puts borrowing costs higher. And the issue is they encouraged borrowing when they were adding so much liquidity 2 years ago. I mean, somebody was asking me yesterday, what do you think the problem? In fact, it was a conservative counselor was saying to me, so what do you think the problem is right now? And I said, well, I think it's pretty much self-created. Of course, you've got these shocks in the world with COVID, and you've got the war. But if they hadn't printed so much money and encouraged people to be so hard and loose with their cash, then we wouldn't be in this problem. There's no prudence at all. It's just if interest rates are low, splurge, go out and borrow as much as you possibly can. But the problem is you get a situation like this, and you've been caught on the wrong end, i.e., you've borrowed too much, you've over leveraged. Then you're going to get hurt as interest rates go up and all your borrowing costs go up. So they've got a balance of putting this rate higher and not killing the market off. So companies that have borrowed as well, everybody that's over borrowed, not killing the market off because of collapse, financial collapse, while trying to get this spread closer by fighting inflation. Now, what could happen is this remains at 3% and this starts to drop. And if it drops down, let's say to 7%, which is what the CPI data, that's what they're looking for, then this spread will also come down. So then, all of a sudden we're at 4% spread. So at the minute, the real yield, and this is what they're talking about, the real yield is negative. The real yield isn't positive. We haven't really got inflation numbers under control. So if you were to put your money into a bond, a treasury bond, even though it may pay you 3.5%, 4%, you are still losing money because the inflation number is at 9%. So the real yield is weak. And that suggests that it's going to go even higher. So at this stage, nobody's looking to buy bonds because they're basically going, well, the yield should be, we'll have to push beyond that for us to get interested in bonds. There's too many issues. So
cash is trash in this environment.
Cash is trash. Yeah. So what they're looking for is this to start coming down, improving the real yield. And then what will potentially happen is this will start to become an attractive number to go and start investing in. You invest in bonds, and then you'll start to see the bond yield start to shrink down again. So we are watching the 10-year to get a suggestion of where the market participants believe inflation and Federal Reserve policy is going. And at this stage, it's saying it's continuing to go higher. And if that's the case, gold does badly. Stocks do badly. You know, they can't do anything. So we need something. We need some hope. PPI data, as I say, inflation data keeps stacking up higher and higher and higher, suggesting that the Fed, the ECB, even the BOE, who have been quite confused in their messaging, the RBA, again, RBA is a strange one. They didn't raise interest rates quite as much as before.
I've got to say, at least they're consistent. You know, they've all the way along, they've been very conservative.
Yeah, well,
to the point where they didn't even do anything for what, 18 months, maybe even 2 years. Yes, they just sat on their hands, right?
Well, this is it, mate, and this is what we've got right now is the Fed particularly, and probably the RBNZ as well. Really, sort of like in this,
they were aggressive.
Yeah, these are really aggressive. The ECB's sort of suggesting it's about to get aggressive, and with 10% inflation in Germany, it probably will have to. And then kind of over here, you've got the BOE, who are trying to do a bit, but without sort of like being overly hawkish. Now the RBA has sort of done the same thing, and what you've seen is the currency starting to come down. You know, sort of like come down because because of the policy. The euro is a bit more interesting because the euro haven't really moved yet, but they are suggesting they will, and that's what's now looking like the euro could be the next front runner. We might start to see the euro sort of like start to take off, and then you've got the BOJ over here, and the problem for the BOJ, and we'll put them in two boxes, is that they're so dovish that what's likely to happen is they all of a sudden jump over here because they are choking the economy. They are now sort of like at risk at hammering the import market because imports are sort of going up so high because of such a weak yen. They are likely to have to do something, and something aggressive. You know, they're going to have to be a little bit more aggressive. I think these ones will because of the structure of the UK, these ones will continue to float around. The RBA, interestingly, you know, Australia's got very good exports, and that's really helped things out. The United States, similar sort of like situation. The economy's in pretty good shape. ECB, difficult. Economy in bad shape. Inflation raging, and neighbours to the source of the problem. So, you know, what do? I mean, the underlying fact is here that the market is broken. You know, they caused the situation. Central banks caused the situation, and they'd love us to think it was about the war and it was about COVID. But really, that's just the light that's just the spark that lit the torch paper. But it was their policies that have pushed us into this situation because they made money hard and fast, and then they waited too long to admit that this inflation situation wasn't transitory. So now we are in a situation where the market is broken. And as scary as that sounds, where it isn't so scary is when we kind of consider an asset like gold. Because as I say, inflation remains high. If let's say inflation remains up here, you know, we don't know exactly where, but let's say it remains around about the 6%, and central banks unable to continue to raise rates because they're breaking the economy, so they're starting to either bring rates down or pause the rates. All of a sudden, this asset is likely to go in that direction. So gold's really interesting, mate. I mean, you know, fundamentally, the terrain isn't ready. The technical picture, the terrain isn't ready. But at some point, I would suspect that gold is probably the best place to put our money in a potential world where the next year, 2, possibly 3 years is a struggle because inflation stays high and the central banks are not able to continue to raise the interest rates, pushing the 10-year higher. And that's what we're waiting for. We're waiting for the central banks to pause and inflation still to be elevated, and that will be the environment for gold.
Yeah, look, intrinsically and historically, there's no argument you can make that can refute what you're saying. No argument at all, because intrinsically and historically it must go up in this environment. Sorry, I better add that. Chart's not telling me that, so can't buy it yet, as I said. When the proof is there, as you're saying, it's exactly what you're saying, and I'm repeating it in a different way. On a technical scale, if I see confirmation of what you're saying, then I have to buy gold. In the meantime, as I keep saying, buy physical silver.
Buy physical silver. Do you know the only thing about silver now? Silver's sort of like going to make you a lot more money if it goes up. My only problem with silver is because it's an industrial metal, and if the market is not showing signs that it is turning around and we're starting to see some growth, I would be a bit concerned about that. But you know, if you're gonna make money, silver, if you consider sort of like where we are, you know, if you're gonna make money fast, I should say.
Yeah, actually, I've got to preface that by saying this is not necessarily about making money; it's holding money.
Yeah.
I just said cash is trash, and I firmly believe that. And then that's probably 5-year term, I would imagine.
I agree, mate. I agree.
Even worth holding. But things like gold, things like silver, I think are far better. In your, maybe buried under a tree. That's the place to put gold and silver.
Well, mate, do you know what's getting very interesting as well is that silver, there'd be question marks about for me just because of the industrial aspect to it. But where gold is becoming really interesting, now, of course, if the market turns around, silver's exactly where you want to be because it's precious and it is also an industrial metal. So if there is any hope that we're starting to get some growth back into the economy, let's say the Fed's, you know, actually reversed position, which they will eventually, then silver will likely fly. And of course, speculation will move the price before we get anywhere near that. So I suspect if gold goes up, silver will possibly follow it as well because they're very.
There's another Asian, and it's called manipulation, which is silver's, you know, highly manipulated as is gold.
Yes.
So that's what you're fighting against, really, at the end of the day. But you know, as that comes out of play, and I'm led to believe that is happening, the likes of Morgan Stanley, who have really been manipulating silver for a long, long time, have lost interest, from what I'm hearing. I'm not seeing that in the price right now, but that's what I'm hearing. Yeah.
Well, do you know the other interesting thing is that if you see what some of these CEOs and major players in the gold market are doing, they are talking about bringing gold into the modern era, and they're talking about digitizing gold to the point that you can trade it a lot more frequently. You can trade it a lot more easily than you can currently do. Now, of course, there are cryptocurrencies that offer it. You got, you know, the likes of Pax Gold and even DigiGold by the Royal Mint in the UK. You know, so a reputable sort of company or organization. They are offering DigiGold, but they are talking about the whole industry starting to move towards more of a crypto-based gold, where you would buy the asset and you would hold it as a digital asset. So, you know, storage costs are free, effectively, and you still hold the paper. So you're not having to kind of like go buy my gold and store it in a vault. They would do that, I guess, by, you know, almost by default because you bought the digital receipt of gold. And what happens, you know, if we sort of like think about what happened before with the gold market, really sort of like, you know, money was based on, or I should say fiat currency was based on being backed by a tangible asset. So it was backed by gold. And fiat currencies got to the point where they printed and printed and printed, and they weren't any longer backed by gold. And the problem now is that they're backed by nothing. And this is the potential result of a fiat country being backed by, fiat currency being backed by nothing. But what could potentially happen is where there's all these sort of like different moving parts are going on, and we saw it with Bitcoin. You know, Bitcoin was the answer to fiat currencies. It was a tangible asset that was finite and would become a new currency and the new way that people exchanged wealth effectively or exchange money. But of course, that needs adoption. Just like language needs adoption. There's no point in me starting a language in my household if nobody else speaks it when I leave the house. So, and that's sort of what's happened sort of like so far anyway with the likes of Bitcoin. The adoption is so minute, so minute that it can't really kind of like get any traction. Now, it could be the death of something like Bitcoin if gold manages to step in and say, do you know what? We will become a digital currency. However, we are going to be backed by a tangible asset, which isn't, you know, just something that is on the blockchain, and it's not a mathematical equation. It is something that you can now go around and say, you can trade this and buy goods and services, because you can't buy anything with gold. You can't go into the store and sort of exchange your gold. But if they can...
You can in my store, but you won't get the price that you think it.
Well, I mean, I couldn't go and buy anything from Starbucks with a block of gold.
No, you can't.
But what if that was to become a thing? So effectively, go back to the original idea of what a fiat currency was, but using a digital gold. All of a sudden, the price of gold takes off, and it yet again becomes the currency of the planet. And I think it's got a lot greater chance of that happening than something like Bitcoin, because we all know what gold is. You know, we know where it comes from. We know we know what it looks like. We can touch it. You know, there's so the gold, but I'm not just sort of like saying.
Isn't that the point though? You can touch it. So if I'm investing in digital gold, and digital gold is worth whatever, let's call it $1,500 an ounce.
Yeah.
Let's call it that. Suddenly, I own 1 ounce of gold by investing $1,500. But that gold is held where? Not by me.
No, but not unless you want it. I mean, you can claim it whenever you want. I mean, that's the point. That was the point.
But can you? And that's my point. Can you?
Yes.
If I haven't got it sitting in under my tree, as I said,
yeah.
Then the SH1T hits the fan for some reason, and whatever that could be war, could be anything. The physical gold could be changed from this storage area to that storage area, or they could suddenly say, well, hang on, your ounce is no longer worth $1,500, it's worth $400, or whatever the case may be. Just like the US dollar, they can manipulate that price, and they're still mining gold. It's not a finite resource, right? So if they're still mining gold, and let's say they discover 10 times what the world has ever known, then the price of that gold goes down to billion. And if I'm holding that digitally, and I'm not suggesting this is going to happen, if I'm holding that digitally, then I don't have the option really of hanging on to it. At the end of the day, it's going to be divided, just like the US dollar. They're going to print more of it, more of it, more of it, and it becomes valueless.
Well, so gold is gold was formed from a supernova. So gold is basically stardust. It's an explosive star, and as the planet forms, you know, all the sort of like all these matter from the galaxy kind of came in and started to plant itself in the Earth's core. So gold was formed when the planet was formed, and yes, there is a lot of gold. You know, there's gold in the sea, but it's so difficult to kind of to mine and get out. There's certainly, the particles are so small and they're so difficult to separate and so expensive to do it. They can't do that. So where
But the atom was hard to split at some stage as well,
Yes, it was, mate. But I'll tell you what isn't hard to split is a piece of paper. So the Fed can literally go, just turn on the printing press.
That's true.
And
that's my point. If it becomes that easy.
If it becomes that easy, and inevitably there will be, just as like they're doing with diamonds, there will be people that are currently out there seeing if they can create gold rather than mining it from chemicals and science and
yes,
there are people out there doing that. So yes, ultimately that could happen, but there's no stories, there's no data, there's no sort of suggestion that is about to happen, and they can't just print it. It would still be very expensive if you've got to turn on a huge generator to kind of create a block of gold. Then that's a lot more expensive than it is just by going and then getting trillions of dollars that you can, and actually those dollars don't even exist probably. They're just numbers. Whereas at least with the idea with gold, there will be a tangible asset that will have to be held in a vault. And if you want to claim it at any point, just like the original idea was, that you go to your bank and you say, here's my IOU for gold, which is $1, give me my gold back. You were holding the gold and that was the IOU. Same deal, it'd be the same thing. I
actually love that in principle. It sounds fantastic.
It does.
And I considered doing it myself. But I'm still far happier holding the bar in my hand or holding the ingot in my hand. Way happier than I would be in any other. And I guess I play devil's advocate, and I'm not doing it on purpose. I just look at the potential downside of doing things, right? And the very first thing I think of is, okay, digital currency. What happens if the internet suddenly died? What happens if, because I'm a businessman, I rely on FPOS machines, right? Every day of my life. I rely. So does every supermarket on the planet. So does every bank on the planet, blah, 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 blah. What if suddenly the power goes out, for instance, nuclear war, right?
Yeah.
For instance. And I'm not suggesting that's going to happen, but I need to look at the long picture, if you like, and say, well, okay, how do I actually protect myself against that? How do I protect myself against whoever?
I get it, mate. But
call him Putin, call him whoever he is, or whoever
I hear what you're saying.
Suddenly they switch us out of the picture, and that's easy to do.
Similar. That's probably quite similar to people sort of who feel like they need to get off grid because they don't think that the current situation can sustain them, so they need to go and move to a place where they can create their own food.
If I was 25 instead of 65, that'd be the first thing I'd do.
Yeah.
I wouldn't be a prep. I'm not talking about being a prepper, but I think preppers are kind of out there. But certainly living off grid makes perfect sense to me.
Well, people do it. People sort of.
I know many people here in Tassie that do it. Yes, got lots of friends do.
But I think the general population won't think like that. And if we're sort of like we're talking about you, if you were to have the tangible asset, I suppose the point is the idea that and this isn't my idea. This is the idea of dealers and institutes and CEOs that have got an interest in the gold market. Their idea is to make it so gold is yet again an exchangeable currency. And the way they're thinking of doing that is by making the digital asset, giving you the digital asset. So if you hold the bar, you can't spend it. Yes, you can. Yes, you can store it and potentially protect your wealth. But the idea is to make it a currency again, where you can actually go and utilize it. Just in the same way that Bitcoin was the idea with Bitcoin was that you could go and utilize it. It wasn't really meant to be a store of value. It was meant to sort of take on the US dollar. I know it's sort of meant to be becoming that, but it hasn't been a very good one. Gold has provided a store of value. Gold prices come down, yes, but by 3%, where the stock market's come down by 25%. So it has managed to store its value. But the next step is to take it almost back to the original idea, where what you then go and use to spend, which would be a digital asset instead of a piece of paper, is backed by a genuine amount of gold. And if that was to happen, all of a sudden, the gold price is going to fly. And I'm not saying it will happen, but what I'm saying is, if they get it right, it would probably have a better chance of adoption than any cryptocurrency that's out there.
Yeah, look, I totally agree with that point, and that makes perfect sense. Unless, as I say, these people who are out there, as you say, trying to make gold out of, I don't know, lucerne or water or hydrogen, I don't know. If they don't succeed, or if they succeeded, then that is going to be an issue. But if they don't, which I guess historically it doesn't make sense that they will, then yes, I take your point, and it's perfectly valid, and I get it, and I agree with you. It will soar if that's the case. Is it likely? I've got no idea.
No, I haven't got any idea either, mate, because a lot of these things start out as good ideas from these people, the organisations, but it doesn't necessarily mean it's going to happen. Well,
the digital world has created all this, I guess, speculation around where we do business and how we do business in the future. And we've been speaking about this for ages. Are we now moving to a digital world? It seems almost inevitable that we are. What backs that digital world in terms of value is precisely the point that you're making. And that makes perfect sense that gold would be forefront of that if it's finite. And that's my issue. If it's infinite, then we've probably got not so much a manipulation, but a variation in value. I'll put it that way. A finite resource obviously has got, and it's been that forever. At the end of the day, gold has been that finite resource forever, and that's why it's held its value, because there's only so much of it. And that precise model is what they've used with Bitcoin, because they've only released however many it is, right?
Exactly. I mean, there's months, if not years, before we get to the point where their ideas would potentially sort of like take hold. But what we do know is that in this particular environment, gold has still held its value relatively well, and if the environment shifts just a little bit away from the Fed raising interest rates, then gold is likely to be a decent mover. And if you are able to get hold of gold at a near low, then hold on, because you could be actually sitting on a small fortune in 5 to 10 years if the idea that they've got to change the way that we utilize gold actually comes to the fore.
We're talking
Bitcoin,
trading, aren't we? We're trying to pick the reversal point at the end of the day, and that's what it boils down to.
Yeah, exactly.
When it turns, we want to be on board.
That's the silver chart. And this is the gold chart right now, which is just under the monthly pivot. But it's holding on, it's hanging on around in this area, and it's attempting to kind of get itself going. It looked like last night it was able to do that. If you look at a short-term time frame here, looked like a decent move to the upside, but then when you kind of switch to the longer-term time frames, it has come down. So I would suggest today we're waiting for CPI data to come out. We are looking to see whether gold gets through the level, comes back near the monthly pivot, and then we're probably having to wait until after the data is released, which is going to be potentially could spook people out a little bit. So this is a huge if, because CPI data has to behave. CPI data has to come out weaker, and if it does, then I suspect what we're really looking for is something like that, where gold can come up, and if it comes back, I don't know if it will, but if it comes back, then we've got an opportunity, to sort of, and it will probably depend on how weak that CPI data is. If it's incredibly weak, gold's going to go and not going to come back for a while. It was on the edge, what we might see is gold, at least move higher and potentially come back. And if what is the most likely to happen is that it's still high, then there's a chance that gold actually starts to come down from here, and we just got nothing to do. So we're still waiting for this to happen, and we're waiting really, as I say, for this to happen potentially and hopefully after the data is released rather than before. Because if you trade anything today before that data is released, you are gambling, which is fine, absolutely fine. I know it's a dirty word in the trading circles, but it's absolutely fine as long as you have defined your risk and understand that yes, you could make a 5-bagger, but the likelihood is you're either going to get taken out first or you're going to get taken out. If the likelihood is that's the case, the likelihood is that the market's going against you. Now, of course, you could try and sell it off, but the problem is with selling the market off is that it's pretty oversold and very close. If you look at the Nasdaq as an example, the Nasdaq is very close to this level here. It's currently through it on the week. It's a weekly chart. It's currently through it, but this week's bar has not yet closed. So if we're looking at that low there, might even be it's somewhere in this area. So we're basically on top of that area, and the Nasdaq may actually start to come up. So you're basically trading into a low if you trade it short. So at this stage, difficult to go short. Nothing enables us to go long. And the reason I say it's a gamble is that if you're going to get into this trade, then the likelihood is that you're going to be going something there for a long, there with a stop, and you're looking really for the Nasdaq to start coming up and potentially sort of like not very good line, but testing some sort of trend line, maybe this one here. If it can do that, but you're looking to get in somewhere in this area, and at that point, you might get maybe a 3 or 4 bagger if it starts to move higher. But it's a gamble, and you need to recognise that gamble is likely to probably go against you. If we think about the data so far today with Germany and in fact, the 3 bits of data: Germany, PPIs from the United States yesterday, and also Japan. All of them still pointing in the direction of inflation, so not looking good for a long at this stage. And you've got to be very careful. Is the point?
Yeah, look, there's a bit of that going on in the charts, and the currency charts are exactly the same. I'll point those out when you're done. What I'm actually looking for in the next 24 hours or so.
Well, I'll tell you what, mate. I'll finish on the dollar, because same deal with the dollar. We are seeing some signs of weakness up here with the dollar. We saw a bar a couple of weeks ago, which suggested some downside. Last week's bar was a pretty decent hold. Now we're sort of floating around in this area here, and there could be some downside for the dollar, but we haven't got a lower high. And even if we were to get a lower high before the data's released, I don't think I would trust it. So really what you want is data release, lower high, boom. If it goes data released, higher high, it's still, I'd be a bit nervous about trading it long, because people are obviously waiting. People are hoping for a turnaround. And when you see a chart which has gone as far and as aggressively as this, it makes upside just a bit harder to extend. I don't know how much further this can extend. You might be trading right into this level here before it waits again for something else to help it out, which is my problem with the dollar. What I prefer is a turnaround, which is why I'm not bullish on the stock market, but I'd much prefer a bull run on the stock market than a bear run.
Yeah, look, I'm 109 on the dollar index, second week of November, I think. It is.
Okay. Yeah. Second week in November. Okay, mate.
Yep.
I will hand it back to you, buddy. Anyway, that's sort of my 2 cents worth on the way the market is right now. Patience is really the bottom line. I don't think that there's a safe place to get into this market today. Anybody's in any trades, let us know, and we can maybe have a look at them and give an opinion if you're interested. or if you've got anything else to add, feel free to do so by posting in the message area or coming on camera. You're more than welcome to do that. But that's pretty much the roundup of my opinions, mate. Sit on your hands for a little while.
So I've not missed too much this week, mate. That's what you're saying.
No, you haven't actually. Well, actually, you probably missed out. If you were trading the some of the stuff I was trading this week, you've missed out on quite a few losers. You're all right.
Well, no, because I was desperate to get short silver, desperate to get short Nasdaq.
Oh no, yeah,
you
you were on the right side of the market then, mate. I was on the wrong side numerous
it's
times.
good in theory, but you got to trade it, right, to make money.
True.
You can't. Well, you can sell your ideas, but at the end of the day, you got to trade it. So this is the dollar index, and
I'll be one moment.
if I look at this weekly chart, I can see this big game changer bar 2 weeks ago. Countering that, of course, is the big game changer bar last week. And this 113 level, we've been here for, 3 weeks, nearly a month. The issue that the dollar index has, well, there are many, but let's go through one or two of them. It's just skyrocketed, no question, and has to come to an end. The issue with that statement is it's not near its highs. Don't know if I can, there's the highs here, right? So we're still a long way from there. That's 600 pips away. And this level here, which you can't really see on this chart, but it is a strong resistance and support level. And that's why it's finding it very, very difficult to get through there. That said, if it doesn't get through there, and we're showing signs of that right now on the weekly chart, as I said, game changer bar, sitting right there. If this does print a lower high in this vicinity, then I'm more than willing to trade it down to the trade line or trend line, really. If you have a look at that trend line on the daily chart, it coincides with 109 and this level, as I said, around about the second week of November. That is entirely possible in my humble opinion. What we haven't seen yet is a lower low. There's the low there, or the previous low there. So it's not lower. And we haven't seen a lower high, as Ash said. What we have seen is a big reversal bar there. And if that does get backed up by a lower high, then I'm more than willing to get into a short here and trade it down to that 109 level. So that's my thought process there. A couple of other things that I want to look at, and of course, euro dollar, the reverse of that. And if you have a look at that chart, you'll think, well, just move to the next one. That's garbage. How can you trade that? It's a 30-minute chart. Daily chart's a little bit different. And of course, the upside down version of what we've just looked at on the dollar index. Massive, massive, massive trend short without question. But that big reversal bar there got a little bit of backup. Now we pull back off it. And again, same thing with the dollar index upside down. If that does print a higher low to follow up that big engulfing bar, then to trade it back to here makes perfect sense. Around about the 99 mark. Don't forget we've gone well below parity, 94.80 or something like that we got to. I cannot see this as a bad situation, really, if it does print that higher low. But you've got to have a setup rather than speculation. And at the moment, there's just absolutely nothing to show here. It's a garbage market, really. So you either, as Ash said before, take a punt on this based on the news and trade it up to here maybe, or you stay out until you get proof of that. So I'll opt to do that, being a conservative gent that I am. The other things that I'm looking at, I think, are far more likely to be traded, and this one here is one of them. It's Swissy Yen, and Swissy Yen, to my mind, looks very much like a buy if today's bar closes on or just below, maybe on the monthly pivot, where it is now. So if I were to see tomorrow's in the morning, if I were to see this and price closed here somewhere, I would place an order long above that bar. I'd take my first profit just before that high, and I'd look to match these highs up here. So that's Swissy Yen, definitely on my watch list. Aussie CAD is also a little bit different reason. And if I look at the weekly chart on Aussie CAD, that's what I see. I see this confluence area. Now, this is not super strong. If I go to the monthly chart, you'll see that there has been support here in the past, certainly support here, false break of support here. And now we're at that same level again, which is what, 86-ish, around there. Certainly at the bottom of the channel. And I'm looking for a price pullback to this level here, 88-ish. So a couple of hundred pips in there maybe. Do I trade it off the weekly? No, there's no signal there to trade, but you can see that it's pulling off that level. So you go to the daily and you see a game changer bar sitting there on the daily. Would I trade that on its own? No, I would not. But if you're a speculator, then there'd be worse trades to take. But I'll be waiting for that higher low. So tomorrow, if we were to get a higher low here, it still doesn't make sense to me because it's one candle. But if on Monday, Tuesday of next week, we see a little bit of a rally, then a pullback, then a higher low, maybe next Wednesday, I would be looking to trade that back up to that level. That's Aussie CAD. Kiwi Swissy. Yeah, look, Kiwi Swissy was one of those game changer plus scenarios today. And what I mean by that, and this does look attractive in some ways, because we've had this big bullish engulfing bar and we have printed a higher low here. I'm interested in trading this not long, but short. And my reasoning is, if this is indeed a reversal, I've got no idea why I've got that EMA on there, but I've got the wrong template, obviously. But anyway, I've got strong reversal bar here. I've got another strong reversal bar here, and this one became an inside bar on that. For that reason, and the reason that this is in a massive downtrend, I feel this is possible to go short. The problem is that it is in a massive downtrend and we're in the wrong position in that trend. So we're buying at the lows, almost buying at the lows, apart from if this candle here makes any sense at all to the market, they'll just continue to buy up here and we'll probably go long. The reverse, and if X doesn't happen, Y generally does, of that, of course, is that we've got a reversal bar here, and as long as I can take profit before the low, I'm happy to do so. So for that reason, can I take that trade today? Yeah, look, I think I probably can. It's dangerous, super dangerous, because you're trading straight into these lows. But if you get my point and take profit here, I think it's a reasonably safe one to take. And if it does continue with trend, then you're going to finish up, going further south. So that's Kiwi Swissy. EuroCAD's the only other one, and you know about that. I've told you about that before. I've got a long order above here, targets here for the first profit, which is not really, I'm not really expecting price to go too far above there, to be honest. So I'm going to take 50% off at that level and move my stops to entry, ensuring that I'm put something in the bank. The only other one I'll leave you with is euro dollar. Of course, that's the Thursday special, euro dollar. And we're looking, of course, for a daily pivot test. Well, how many would you like? Maybe a dozen? Baker's dozen. They're all there. And that, of course, takes away our edge. So there's no trade. There's no possible way I would trade that at this point in time. You've got to wait for that announcement, as I said before. And when it does get announced, then I would be looking for, again, as I said before, a buy here. But the news has to go your way and it has to print something that makes sense. Beautiful targets, weekly pivot, monthly pivot. If you can find that higher low in here and price doesn't ruin the trade or ruin the setup, then I think that's probably the way I would like to go today on Eurodollar. We shall see. Mate, that's about it from me. As I said, I've had a week of not looking at charts, but the charts that I'm looking at right now make perfect sense to me. And if they pan out as setups, then might have a good weekend.
Yeah, sounds good, mate. Just a quick stock idea. So the other thing that the Conservative councillor said to me yesterday was that what did I think of the budget, and don't I think it's good that the energy bill, because the whole thing in this country is that Liz Truss and the government are going to be giving people money to help with their energy bills. And I said the same. I said, look, I get the ethics of it to a degree, but to me, it's just putting your finger in a hole again. I don't know why they aren't putting the money into insulating people's houses. And my stock idea is for a company that offers good home wearing winter clothing, because a lot of people won't be able to afford their energy costs, but they can potentially go and buy themselves a nice blanket hoodie. So I haven't found the stock yet. I've only just come up with the idea. So anybody out there got any ideas about a company that makes home clothing, which means that you won't have to put your heating on? Let me know what it is, and I'll go and buy some of it, because I think it'll do well this year.
Well, here they're called. They're not the company who makes them; they're the company who sells them. They're like onesies, right?
Yeah.
And very warm, very blah blah blah. I don't have one. I promise you, I don't have one. And they're sold.
You got two.
And they're sold in the cheap stores, right? So they're the ones I think that might be taking a fair chunk of the market, not the upmarket ones, but the cheap ones. I'll see if I can do a bit of research on that.
Yeah, do some research, mate. Any way you can make a onesie out of bamboo?
Yeah, 100%.
A bamboo onesie. Send me over some products.
takes a bit of work, but it certainly can be done.
All right, mate, we've got a new business idea. Everybody in the room, you're welcome to join the business. We will have the Trading Buddies onesie, bamboo onesie made by Jeff.
There you go. Watch this space. Yeah, 100%.
Probably won't be so good in Singapore, but I'll tell you what, we're going to need it in the UK.
Need it down here in Tassie in the winter as well, that's for sure. But no, probably not around Singapore or any Asian area. No, I wouldn't have thought so.
Okay, well, I can tell you guys that that there's some mileage in this. Go with me, work with me a little bit. We might make some money.
Okay, I like it. And I'm still physical silver, right?
And you're still physical silver, all right. Gold and a bamboo onesie for me.
My God, the picture's not good, Ash.
We will leave it. We will leave it there. Thank you guys for joining us. Really appreciate it. Thank you to you as always, Jeff, for being my trading buddy, and thanks to Marlon for looking after us. Have a great weekend, guys. Stay safe in the market. Be patient. That's going to be the key. And we'll see you Monday.
Happy days, guys. Have a great weekend. Bye-bye for now.